Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with market updates. The US dollar index rebounded to around 99.8 on Friday after dropping 0.8% in the prior session, as the ongoing conflict with Iran shows no clear path to resolution. The Fed held rates steady this week and still signals one cut later this year, but policymakers stressed upside inflation risks tied to geopolitical tensions. The dollar strengthened broadly, especially against the yen, though it's still down nearly 1% for the week. WTI crude surged above $98 heading into the weekend, driven by escalating Middle East tensions and growing fears of real supply disruptions. Iraq has declared force majeure across its oil fields, while drone attacks have hit refineries in Kuwait, adding to geopolitical risk premiums. Markets are increasingly pricing in prolonged disruptions rather than a quick diplomatic resolution. Although the IEA released 400 million barrels of reserves, the impact has been offset by a sharp decline in tanker traffic. Gold plunged more than 10% on Friday to around $4,477, marking its steepest weekly decline since 1983. The sell-off comes as surging energy prices fuel inflation concerns and dampen expectations for rate cuts. Following increased US military deployment in the Middle East, markets are now pricing a higher probability of further tightening, with October hike expectations rising. Rising treasury yields, a stronger dollar, and profit-taking have all weighed on gold. Yen remained volatile at elevated levels last week after briefly approaching the 160 mark earlier. The pair came under heavy selling pressure on Thursday, falling toward 159 before extending losses to around 157.5 following the Bank of Japan's policy decision. The BOJ kept rates unchanged at 0.75%, though dissent within the board suggests growing concern over inflation. Euro pulled back to around 1.155 after hitting a weekly high of 1.1616 as the dollar attempted a modest rebound. The ECB held rates steady, but warned that energy-driven inflation could push above the 2% target in the short term. Reports suggest the ECB may discuss a potential rate hike in April, with possible action in June if energy prices stay elevated, providing underlying support for the euro.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.